Hi everyone and welcome to today's morning report on Friday the 5th of June with me, Rich Perry, market analyst at Hantech Markets. It's non-farm payrolls day and markets are actually started off on the back foot really. Normally on non-farm payrolls day we see financials consolidating in front of the payrolls report, but it doesn't seem to be the case at the moment. The European trading session has again got off to a fairly disappointing start. DAX down 0.9%. FTSE down 0.7%, so the downside pressure on these markets continues. And the news overnight that Greece has delayed that 300 million euro repayment to the IMF has hardly helped the sentiment in the markets. And what Greece is now going to do is they're going to bundle up all the payments it's got due in June to the IMF and pay the 1.6 billion total at the end of the month. I don't imagine, well, the markets have taken this not in a great fashion. I mean, that's probably due to be seen, to be honest, and it's not all that much of a positive, you could see. Certainly the equity markets are negative. The key factor we're also seeing bond yields spiking higher once again. We had this sharp move higher, incredible volatility intraday yesterday that saw the Bund yield sharply lower, and again we're back bouncing strongly again today. So another run higher on this Bund yield, and certainly the support that you saw on yesterday coming in around that 0.8% breakout means that the Bund yield remains positive in terms of that, and there's a feed through to the euro on that positive correlation between the Bund yield and the euro, and we're seeing the euro stronger today as a result. So interesting moves there. As I said, this payrolls report is the key data, the actual data that we've got to watch out for today. That's at 1:30 this afternoon UK time. Expectation is 225 actually, so very slightly up from last month. As long as it stays above 200,000, I think that would be deemed to be fairly decent. I had heard reports potentially of a reasonably strong number, but the expectation at the moment in the market, or certainly consensus expectation, is for 225. But interesting to see what we get this afternoon. But normally markets consolidate in front of the report, and then you get a lot of volatility after it. So that's to be expected this afternoon. You've also got, in that report, you've got the unemployment data, 5.4% expected, so it's no change on last month. And also the average hourly earnings growth for the US as well. Now that's expected to come in again at 0.2%. Pretty much every month is expected at 0.2%, and the yearly data is around about 2% still, so no real pickup there expected in average hourly earnings. And certainly you'd expect the Fed to be looking towards average hourly earnings picking up if it was going to start to be convincing of its arguments to hike interest rates. So that's that payrolls report this afternoon, but in front of that the European session is fairly negative at the moment. And that is my chart of the day, the DAX. This is the DAX, and will it now come back and test that 11,167 key support again? This is the key May low that we saw. Yesterday we got within 20 pips of it, or 20 ticks I should say, of 11,187, so only 20 away from the 11,167 low that we got in May. And the downside pressure has continued today. Interesting that actually yesterday's trading session pretty much almost bang on hit that 23.6% fib retracement and fell away again. So it certainly suggests the pressure is to the downside, and it certainly looks like that 11,167 level is coming under pressure. The momentum indicator is certainly not positive in any way at all, falling away on the RSI, stochastics and MACD lines on the daily chart. And it certainly looks early on as though the pressure is to the downside. Now this is the hourly chart, and you can see that you've had a gap lower early today. The daily high actually coming in at 11,287, and that is yet to obviously fill that gap at which fell away from yesterday's close, which was 11,000. let me just get that crosshair on it, 11,357. So that is your gap that you've got open still, 60 pips or so, 60 ticks or so of gap there. But certainly the hourly chart looks in negative configuration, has done for all the past week really, with all these momentum indicators negatively configured. RSI consistently below 60, MACD lines consistently below neutral. So it certainly looks as though the pressure is continuing on to the downside, and certainly if payrolls came out negatively today, you'd imagine DAX may well have a bit of a further bout of weakness. In terms of downside breaks, this is back on the daily chart. We would really open up the February lows, really. There was a trading range that we got from February, which is the next real sort of support that you would see coming in. So that February trading range there, you got the low coming in around about 10,600, and up towards that reaction high that we got around 10,985. So about sort of 400 ticks worth of support there from February, that trading range. So that would be your next real target. But certainly if you did break below 11,187, that would really suggest that there was going to be further downside and further correction in this move that we saw, that strong run higher in January, further correcting lower. So I wish you good luck in your trading on DAX today. I just don't. There'll be a lot of volatility, I'd imagine, throughout the day. So just bear that in mind. Anyway, I'll speak to you later. Thank you.